Time for a bit of business news now, and joining me is Evan Lucas, the Chief Market Strategist at InvestSMART. Evan, good morning to you. Thanks for your time this morning. So are you buying these comments that are coming out, particularly from Donald Trump or perhaps even China this morning, that maybe there's a cooling of tensions when it comes to the trade war that's taking place at the moment?
No, to be honest with you. I mean, look, the market did, and I think that's probably the reason why we need to have that discussion is it was very interesting that when he did say out that China had re-engaged hours after they actually put out their $75 billion last Friday was around about 20 minutes before the open of the European futures. So he'd seen quite a trade-off in terms of what had happened over the weekend and then into Asia. So, you know, there are some, and I'll be honest with you, I'm one of them, that was quite sceptical about his timing of when he said that, because the Chinese did come out almost 2 to 3 hours later and said, we haven't done that. We haven't actually discussed what he's sort of alluding to. Yeah. And we are very much looking down the path of what we've said, and we believe that at the moment that's the way that we need to negotiate with him, was basically the reading between the lines, take-home messages. So no, I don't. And I think you also need to look at it from the point of view that his Twitter tirade over the last 72 hours has been quite astonishing. You need to look at that he now alludes to the market as my market. This is, you know, I need to be evaluated from November 9th, 2016, since the rally then. And, you know, the fact that he's starting to see real pressure on the Dow, real pressure on the S&P around the US trade issue is also therefore biting into what he sees as his absolute core bread and butter, the economy and asset increases. And that is, you know, why he continues to scream at Jay Powell. And just to finish on that comment, his attack at Jay Powell, comparing him to President Xi, is something that is so unprecedented, it's so hard to even quantify what that actually means. It just shows you how extreme we've now got with regards to how, A, the US-China trade issue is going, but also the relationship between fiscal and monetary policy, the relationship between a president and his or her central banker is now at a level that we've never seen.
So, Evan, I mean, without getting into Donald Trump's mind too much or his mindset too much, do you think he's like, you know, he's intentionally thrown a red herring out there to try and correct the markets?
Yeah, and he's done it before, and that's why I think you need to look at this. Is that let's go all the way back to March last year when this all really kicked off, when he first actually put in the aluminium and steel tariffs. Remember, you know, going back there where he was going to put aluminium and steel tariffs. You could see that his reactions after the 1st of March last year varied depending on the impact that it had on the domestic markets. And that's the way to sort of look at how he did it. He then backpedaled on, no, we won't do it on NAFTA, we won't do it on Australia. We'll then go down the path of actually looking at auto tariffs into Europe, and he saw the reaction that it had on the dollar, saw the reaction that it had also on, you know, US car manufacturers, because there are parts that come out of Europe that get manufactured by Ford and GM. So he gets pushed by these things and moderates those comments as he sees fit to basically fit his narratives. And again, you know, with what you can see on screen, the one to look there is the currency. And although we've got the Aussie dollar there only, the US dollar is the interesting one, is that he wants a lower US dollar. And everything that he's doing at the moment is sort of counteracting that, because the US dollar, although it does move, it is probably more a safety currency than the things like the euro, the Aussie dollar, the Kiwi. All of those kind of currencies are more risk, and they've all depreciated off the back of it. One of the reasons why we here in Australia have actually been buffeted by this whole scenario, the Australian dollar has fallen almost 17% since March 1st last year to where we are today. So that means that our exports are cheaper to those that we send them to, and we therefore, when we repatriate back, particularly in US dollars, back into Aussie dollars, we get a buffer. Yes, our volumes might be down, but the actual value is better.
Evan, what do you make of the final comments that have come out of Jackson Hole?
They are actually, I think, even more poignant. And it's interesting, last night you actually saw the Treasurer start talking to corporates about spending, because Jackson Hole, as a group, which is all of the main central bankers of what we call the G10 countries, all said the same thing. Monetary policy is not going to sustain medium to longer term growth. It is not going to sustain overall inflation. It comes down to fiscal policy, and that means government policy changes. And that's the first time unilaterally they've all said the same thing. And that is a very, very poignant thing to point out. We know that our central bank has been saying that now for probably about 6 to 12 months. Whether or not we stick and hold with our budget surplus, which we probably will do, let's be honest, Josh Frydenberg isn't going to move. But last night was the first time I've actually seen the Treasurer start to be quite direct towards corporates to start looking to actually increase productivity.
But the business market isn't too pleased with that, because it's got to answer to shareholders.
No, it's not just answering to shareholders. It still has to operate in a market that is depressed. It's still got to operate in a market where there is obstruction to actually moving through the kind of level of changes that the central bank is saying. So the RBA wants to look at sustainable business, wants to look at the way employment is done, look at the way that business contracts are done. That's red tape, and that is government policy. So that's the other side of it, is changing some of the bureaucracy and getting through that.